This is the Wednesday, May 2026 meeting of the Trustees of Trust Funds. And I will call the meeting to order and note that all trustees are in attendance, so we have a quorum. First item of business is the approval of the minutes of our last meeting on April 22nd.
So moved.
Okay, do I hear a second?
Second.
Any corrections, discussions, additions? Hearing none, I'll call the question. All in favor of approving the minutes indicate by saying aye.
Aye.
Aye. And the chair votes aye. All right, the next item is the Haven Metals update, if you will. There's no need to vote on anything, but I had this placed on the agenda. Peter can enlighten us a little bit about what had happened since our last meeting, which was a result of the long-term vendor who produces all the academic metals deciding that it was time to move on. And Peter was good enough to make some phone calls, solve that problem. So why don't you tell us what happened, Peter?
Well, Steve Alley from Alley's Jewelry, who took over from Arthur B. Duncan, which is the predecessor jewelry store, and has been doing it for many, many years, as Duncan's did before him. His equipment is different from the new modern equipment that's there, and he finds it very time consuming. Not having this equipment, Crown Trophy, who Brittany has met with, would be able to do it and is willing to do it. And Steve, although he had said, I will not leave you in the lurch, I will do it one more year, but I would like to. And the final decision was that Crown will be able to do it this year, and so Steve has graciously indicated that was fine with him because it's time for a change to be made.
And further on that, when we were trying to do some research on the terms of the Haven Metal agreement and that type of thing, we were in touch with Steve, and he provided me with the file he kept of every order of metals that he received going back to 1972. That's when he took it over. And he has all the letters and emails that he would get from the high school saying these are the winners and this is the academic category. And so there's a great compendium of the history of this metal, at least for a half century. Fascinating. Just to add to that, I spoke to Brittany Monday, and she said that the guy at the trophy shop will take care of it, and then they'll sit down and try to figure out going forward the cost. But it sounds like the cost will also be within the sum that we approve annually for.
Judy, just make sure that the bill, when it comes in, that it does not exceed what we have.
Always. I wouldn't issue a check. Yep.
Yeah, it appears that while we have authorized some money over the last few years, there has been no request to pay the bill. So I don't know where or who has paid the bill.
I'm working on that.
Yeah, but so we're I had asked Judy to, when we weren't sure whether Crown Trophy was going to do this or not, I had asked her if she would do a little chart for how much we've approved and how much has been spent for the last 5 years. And it turned out, with the exception of last year, when you and I also contributed to the cost, that we've authorized some, but nobody has given us a bill. So we're working on that. But in the meantime, hopefully Crown Trophy will be able to do this for another 50 years.
Yeah.
We won't. Okay, next item is the Tony Ron Scholarship Fund. I have this on the agenda because a week or so ago, Martha Ron, Tony's widow, had, you may recall that Tony was a teacher at the high school, and his widow had set up this scholarship fund back in 2015 or 16. It was a perpetual one. They had funded originally about $30,000. And then about 4 years later, she came to us because she wanted to make it with a higher annual distributions and use of the principal and interest, so it would sunset out as those funds were used. And she had a brief conversation with Judy about maybe making some more contributions in the future. So I asked that this be put on the agenda to discuss that, whether we would approve that. But Judy wasn't able to connect with her before now, so we'll probably look at this again in the future.
Yep.
But that's the whole purpose for this. And we'll wait till next time we have that. The David Kohlhaas scholarship is on there. I think, I can't recall if the last meeting we had to try to get an idea of where that stood. I guess Mr. Kohlhaas had some communications with Brittany. We relayed those. You recall that we're working with Jen Smith on this. She actually produced an initial draft that we gave comments to. As of last Thursday, she had reached out to him. He had left a message to call her, and I reached out to Jen yesterday to ask for an update. She hasn't got back to me. So that apparently is in the works again, but I haven't seen any more drafts. But I wanted you to be aware of that.
Any indication of the amount of the scholarship?
Not a certain number, but I think he was talking enough so that it would meet our $25,000.
And about
Yeah. Okay. All right. Well, we're really ahead of our schedule here. You want to deal with the investment reports, or wait until after TD does?
We can do that. I'm fine. Are you okay with moving forward, and we'll just keep
So
going?
let's do some of the other.
Okay.
Okay, yeah. So we'll looks like we're gonna have plenty of time before they get online. So the next item then is the Public Arts Trust request. So this is, you'll recall that we are holding about 35,000, between 35 and 36,000 from the middle school Percent for Art project. That actually was a long time ago, and they haven't used the money. Well, they finally have, through the park committee and Chris Dwyer, that Chris chairs, has come forward with a proposed contract with a muralist who will paint something in the courtyard. It has a wasp or a bee theme, and that was, we were advised of that coming down on Thursday or Friday of last week, but it required the approval of the city council, which occurred on Monday night. And so this is the material that Judy sent over, plus the item that was delivered by the clerk's office this morning. The thrust
A corrected version.
A corrected version, but the thrust of it is that they're going to enter a contract for $36,000. They have entered it now. It's been fully signed. The contract calls for an initial payment to the artist of $12,000. The city manager has included in the materials a requisition for that, consistent with the vote of the council, along with a certified copy of or attested copy from the clerk's office of that vote. And so what's before us today is approval of that, and then direct Judy to issue a check for $12,000 to the city manager to send to the artist. Questions about that?
My only question is, I think we need to remind everybody, to be on our agenda, we need to receive all materials by the Friday before. And in this case, it wouldn't have made any difference because in the contract, it's 30 days, payment is 30 days after the signing of the contract, which would have been fine with our next meeting. This happened and the original certification came to us yesterday, was incorrect. And I happened to call Tom and say, hey, you know, this isn't right. It had a council person making a motion to approve this who wasn't even at the meeting. And that's why the corrected copy today is showing that. And I have no problem in paying it, but I think we need to make sure that we remind everybody that all materials must be received the Friday before the trustees meeting.
Questions or thoughts, Chris?
No, thank you.
Okay. Yeah, I agree that we set that policy and we should continue to try to follow it. I would say that there are exceptions, and particularly where the city council is only meeting 2 days before we're meeting. But it is a policy, and you know, unless you want to protest the vote, and
No, I'm.
Peter, I'll reiterate it.
Yeah,
Yeah,
I mean, it's, you know, it's our policy. It's, the city council doesn't set the policy. The city manager doesn't set the policy. It's one that the trustees have set, and I'd like to see it adhered to.
okay, I agree. All right, so I would entertain a motion to approve the request for disbursement of $12,000 to the artist.
I'll make that motion.
Okay, do I hear a second?
Second it.
All right, any discussion on the motion itself?
Not for me.
Okay, hearing none, then I'll call the question. All in favor indicate by saying aye,
Aye.
Aye.
and chair votes aye.
That's a check made out to the artist.
Correct.
Yes,
Correct.
yeah.
Okay, I put the next item on the agenda is the Futures Fund, and so I really put this on the agenda because I know you've had questions concerning the Future Fund, and I thought rather than leave it hanging out there, that we ought to have a conversation about it and try to solve it.
If I can get, I'm not clear what I'm looking for, Peter, so can you kind of help me with
Yeah,
that?
and I'm happy to sit down with you.
Okay,
And I'm also willing to sit down with the superintendent of schools who have to have the records of how these were established.
okay,
In what you sent us, it was 27,040. I happen to have been on the Futures Board.
Yep.
So I know the 40,000 was a recommendation from Deputy City Attorney Kathleen Dwyer closing out a athletics injury fund at the high school, and somehow that was voted to be given to the Futures.
okay,
But there's an additional large amount that nobody seems to have any records of, and I'm happy to go with the school department to find it out. You've got enough to do right now.
okay. I'm happy to sit with you. If you find anything, I will go ahead and I ran some reports before in the system. I'll try to grab those again and start trying to reconstruct on our side, like when the monies came over.
Yeah.
I know initially there were two futures funds set up, and then my predecessor merged them in like 2015, 2016 into one fund. And I'm not sure, I don't have any explanation as to why it was done, But I can't help but wonder if it was because at that time it was going to Payson and it was easier just to have it under one fund. I don't know, so I gotta see what I can find on that.
Well,
And my reason is that we have it only in a checking account. And, it's a substantial amount. And if we find out what it's supposed to be used for,
Well, 9 out of 10, I'm having issues with Citizens Bank, and that's another topic that I wanted to have later in the meeting, but we can have it now. Citizens now is requiring every check that comes in for the trustees to say City of Portsmouth, and I have a $136,000 check from the futures that they won't take because it says Portsmouth Futures. So I have a call into our rep at Citizens Bank because it says Portsmouth on it, and we've always been able to deposit these before, and I understand that the laws are changing because of fraud and that sort of thing. But if it's going to be an issue, as I explained to the people at the bank, we have 80 trusts. Not everybody's gonna write it as City of Portsmouth because sometimes they just send money in without asking who to make it out to. So, I mean, it might be that if they're unable to accommodate us that way and another bank is, that we might have to eventually look at changing over to another bank, that will allow us to be able to make those kind of deposits. So I have a call in, or I'm going to be making a call in to our rep, who's one of the VPs. Our old one retired, I didn't know that, so now I've got a new person. So I'm tracking it down, but I do have a check for $136,000 from Futures for their yearly payment.
from who?
The state.
From the charitable fund?
Yeah. So, but they made it out to Portsmouth Futures and they won't take it. So,
And that's to pay for scholarships for this year.
and admin costs, I believe, come out of that as well. So,
Okay.
which is usually around, 38,000. So, yeah.
Which comes from a different fund, it's a charitable fund.
Okay.
Joe Sartell and loved to set these things up. And he set up a trust in his mother-in-law's name to pay for the administration costs of the Futures program.
Okay. So I will be circling back with you on that piece, but I've got to find a way to get this check deposited so that I can get it into the proper place so that they can do what they need to do because it's scholarship season and it's also time for them to get their admin costs. So
Is Judy Burrows still at the charitable fund?
I have no idea. Yeah, I don't know.
If you have a problem,
Yeah.
maybe they could reissue the check.
Well, that's what Jenny, who's the Futures person, my contact over at the high school, said, maybe I can have the check reissued. So I'm gonna circle back with her, see if we can do that real quick. If we can, then we'll do that. And then in the meantime, I'll tackle this problem that, we have 80 trusts. Not everybody, a lot of them do, but unfortunately, it's like a semantics thing for them. They were very adamant about it. I had 2 checks that I had to get sent back.
Is it possible to just print a ledger with a history of the account, receipts and disbursements?
I'll ask the question and say, can you add Portsmouth Futures to your list of acceptable accounts that will go into the trust funds? I don't know. That's why I need to talk to them to see what they're willing to do for me.
Well, no, but I'm saying to go back to Peter's original inquiry.
Yeah.
Can you just print a history of that account?
Yes, but the way the system prints it, it's like line by line, which is fine, but it's like every single entry hitting every single account. So it's hitting the payables, hitting cash. So I'm going to have to take it and narrow it down to just the one entry coming out, almost like a bank statement. Right now, it's got all my journal entries on it. So literally, you see the same $50,000 coming in and out through 4 times because I'm hitting debits and credits into the system.
But if Peter's question concerns where some of the original funds
I
came
might
from.
be able to help with that. That's what I'm saying.
Yeah, so, and just so you know, the 2 Futures Fund documents that I sent you, that, the second one says that the first one merges into it.
Okay, so that could be what he did. So that might explain the Peter piece of it. So he probably had two separate funds and then merged them together, so.
No, I think they might have just had one, the original 2009, and then 2 years later, they signed this second one.
Okay,
And it says right in it that whereas the Future Scholarship Endowment Fund, which is, well, this is called the Administrative Endowment Fund.
Yeah.
There are some, but it says that it, by its terms, are hereby merged in and becomes part of this Futures Fund.
okay,
So,
okay. I'll look and see what I can pull. Again, I did run reports last time. I'll run them again and
Okay.
see what I can put together for Peter, and then circle back with Peter and see.
all right. So, let's, I guess the two of you can work on that.
Yep.
Before we put it back on the agenda again.
Yeah, and I will get in touch with, Zach McLaughlin.
Okay,
Because all of the information was done under the superintendent, of McDonough, who of course is no longer here.
Yeah.
So,
And so, is there some question as to whether we should be looking at a money market or something for this instead of just
it's
ordinary?
invested.
yeah.
It's with TD.
Oh, okay, it is, okay.
Yeah,
So,
it's the bulk is in TD, the bulk of it's in TD, and then there's 20,000 right now that's sitting in the checking account, and it might have been that money was brought over because there were scholarships going out, and they haven't been issued yet. So,
Okay, all right. So the
but
spreadsheet
that's why,
you gave
the
us.
bulk of it, 160, I think, 100, yes, is in TD investments.
Okay.
Yeah.
All right. And we'll have this tabled until you guys are ready to
Yeah.
discuss. Okay. Next time, you got some checks for us to sign?
Nope. I
Well,
do
then-
not.
Let's, we still got another
Yeah,
5 or 6 minutes. Why don't you give us the,
The question, Jody,
Mhm.
thankfully, TD sent me the market review in the
Yeah.
mail.
yeah.
How did they get the address they sent it to?
They asked me for it, so that's the address I had on file. Is it wrong?
I always have everything sent to P.O. Box 673.
You know what, I think I took it off the website, and that's probably why. I think it had your street address there. 673, Peter?
Yes, please.
Box 673.
Yeah,
My
Our
apologies.
website lists your street address, you know, when you get the city
Yeah.
list of people who are on commissions, they give the street address, not PO box.
Yeah, I'm sorry, Peter, I didn't realize that.
Well, the monthly report they sent goes to P.O. Box 673.
Yep, well, I get the same thing, and I got one of these delivered to my house as well.
Sorry about that, Peter, I'll make me fix it. Yes. This one
Thank you very much.
You're welcome. And then this one too. Yep.
All right, well, everybody should have received these on
Yep.
Thursday, Friday of last week, and presumably you've had a chance to review them.
April
Anything,
was a good month.
yeah, anything you want to add to these, Judy?
No, and I'm sure, TD will probably talk a little bit about April like he usually does as well. You know, it was a good month. So, you know, probably a month, very up and down right now, so, yeah. Then I also gave you, copies of the consolidated statements of accounts, which was a total of, 32,700,000 yeah, for, end of April. So, yeah, it's doing good. The TD did receive the $186,000 for the indoor pool, so they will be investing in that, and we'll see it definitely in the next cycle. So the check's cleared and everything, so that was a little hairy, getting the money down there. Post office was, oh, we don't know where it is, and he's like, I never got it, and I'm like, they're saying they delivered it, you need to look around, so, but they finally got it and everything's all set, so that's good.
Not quite related to these reports, but.
Yeah.
So what funds of which we made decisions to put into certain,
Yeah.
investments
Yeah.
are still yet to be done, or is that all accomplished now?
Newburyport Bank for the money market, which is the public arts, public funds need to be moved from Bangor Savings to Newburyport. I had a form that Chris needed to complete. They have information on Peter and yourself, but they didn't have Chris yet. He's filled that out. I'm sending it back. Then they'll send over the signatory. The good news is the rate's gone up some more. So it was 2.75%. It's now 3.25%. So we should be opening that, and then we'll have to go over into Bangor and get the money and move it over to Newburyport Bank next week.
Okay.
Okay? So that's the only thing that right now is pending. Next month, we had talked about it, one of our CDs will be due to roll over, but we meet before that date, so I will have updated CD rates at that time to see what you would like to do with that. And that's for $250,000 for the housing endowment. The low income, lower rate housing market.
That's
trust.
June 24th.
Correct. That is correct.
All right.
Yeah, we meet before that, so I'll have all updated rates and we can make a decision. Okay?
Any questions about any of the reports?
Is it just coincidence that Newburyport Bank has 254,410, Eastern has 254,584?
They were at different rates when they rolled, and one was at TD Bank, and then Eastern had a better rate, so we rolled it out of there, and that's why. So it's just a matter of different investment CD rates.
Strategy. Yeah.
Yeah, and I think one was for 5 months, one was for 6 months,
Correct.
sort
Yeah,
of thing.
Newburyport was 5, right?
Yeah.
Yep.
Yeah.
Thank
So,
you.
Yeah.
Okay, well, where are our folks?
I'm surprised, usually they're here earlier.
For what it's worth, we had a similar instance at the Portsmouth Yacht Club. So ladies committee hosts like the kickoff event every year, and some of the checks were made out to PYC and some was made out to the ladies committee. And the bank was very difficult in terms of depositing the checks this year, so we had to come back. There's a number of them that had to be rewritten. So it's not a unique thing we have here. So as Judy said, it could be a new law that's making the change.
And I'm sure that's exactly what it is, the pressure on the banks to.
Yeah.
Well, I've been a customer of TDs for years and years. I can't cash a check without an ID. Because, and they,
Hi, John.
now they say,
Morning, Judy.
Morning, John.
you gotta bring it.
Yeah.
Good morning, everybody. How are you?
Good.
Oh, thanks. You by yourself today, John?
No, she's
Oh,
there.
yeah.
Hi, Suzanne.
I have to ask, how warm is it in DC?
95.
Well, it was 94 here yesterday, so I guess we're not that far off.
No, but tomorrow is supposed to be 64.
Yeah, crazy.
Wow.
Same here.
Welcome to the new norm. So
Exactly.
I
we're,
myself on calls with clients kind of all over the TV footprint, which is from Maine to Florida. And this time of year, I usually tell people, it's that time in northern New England where it looks warm outside, but it's not. But yesterday was definitely an exception. Today, too.
I love it. I'm perfectly happy.
I see you in Florida someday, Suzanne.
Oh, I won't be long.
Be long. Okay, well, we're ready for our quarterly presentation, and everybody received the materials that you were kind enough to have delivered to our homes.
Did that work out okay?
Yep.
Yeah.
Yes, except I gave Peter's street address and I need to change it to a P.O. box, so I will resend that to you. Totally my fault, I had sent the street address. He got it, but he'd rather have it go to his P.O. box in the future.
Sounds good. Yeah, just let me know, Judy. We'll do that
Okay.
the next time.
Okay.
Okay. And may I share my screen with everybody? Is that okay?
Yes, please go ahead.
Do I need to do anything?
You know what? I don't see that functionality for. Yeah, it's grayed out.
Where do I need to go? Does anyone know? Or do I
Well,
need to get Kevin?
If you all have it, I can just speak to it.
That's fine.
Okay.
Okay.
Yeah. So if you could turn to page 4 of the deck that says investment review on the cover page, it's got the columns on it. And page 4 says page 4 at the bottom. And it's got the pie chart. Does everybody know where I mean?
Yes.
Yep.
Yeah. Okay. Perfect. So, forgive me for reminding you ad nauseum, although I think Chris is only hearing this for the second time. All of the portfolios are managed identically. The investment models that we have constructed are the same for all 4 portfolios. So what I do in these calls is I put scholarship first, I think just because it's the largest in dollar size, but all of my comments apply to all the portfolios. So we'll go through specifically the scholarship reports in detail, but it applies to all 4 portfolios. In addition to that, if you look at the right side of the page, the pie chart, just the pie chart alone, shades of blue, purple are equities, yellow, beige, whatever you want to call that one, is fixed income. So you can kind of quickly see your portfolio is 75-25 equities and fixed income. And then if you look at the detail to the right, you'll see just a higher level of detail within those categories. So at the very top right, you can see U.S. large cap stocks at just under 60% is the largest component. And then below that, you can see the largest holding is roughly just over 50% to large cap core. Think of that as the S&P 500.
John, you can share now.
Yes.
Yeah, you can share now if you
Oh,
like.
fantastic. Thank you. Okay. Yeah.
Thank you. Sorry to
Glad
interrupt.
do that. Not at all. Let's see. Please let me know if you can see it.
Yep.
Yep.
Okay, great. And let me just zoom in a little here for you. Is that reasonably large enough on your screen?
Yes, and we have it in front of us as well.
Yeah.
So.
Okay. So I was just pointing out the additional diversification within these equity sectors. So within U.S. large cap, the largest exposure is to the S&P 500, and that's consistent with your investment policy. We do have a tactical allocation to U.S. large value and dividend style stocks. That was particularly helpful in the first quarter of 2026. 5% allocation to mid-cap stocks is in line with your investment policy. And then in international, we're at roughly 11-12%, and the majority of that is in international developed markets. And we did add an allocation to international emerging markets at the very beginning of the first quarter in January of 2026. And then your fixed income components below that, 25%, with the majority being in intermediate bond strategies. Those include, and I'll show you the detail on this, exposure to both U.S. Treasury securities and investment grade bonds. And then you can see right above that we have below 2% allocation to below investment grade, which is permitted in your investment policy. And then cash, the target for cash is 2%. You'll see that, depending on when the portfolio rebalances, which is quarterly, you might see that grow as dividends come in, but the target for cash is 2%. I'm going to jump over to the left side of the page now, and for scholarship, you'll notice I highlighted at the top the market value at the end of the first quarter was 14.9 million. Portfolio was down in the first quarter. You can see that down below the minus 1.92%. Obviously, we're now roughly halfway through the second quarter, and I know you get the monthly dashboards, but I can just point out to you that for a point in time reference, this portfolio is now over $16 billion in market value. It's been a really interesting start to the year. We'll focus on the first quarter here, but you see obviously quarter to date and year to date figures were the same at 3/31/26. Quarter to date, second quarter, the portfolio is up almost 8%, and your year to date figure is 5.6%. So it's been a really dramatic turnaround in the second quarter, despite the fact that kind of the reason for the volatility in the first quarter really hasn't lessened in any way. So I'm going to go into much more detail on performance with you in a couple of minutes. And then just at the bottom of this page, I show you the yield. Your yield is, obviously your account's 75% equities. That's about a 1.5% yield, and then you're pretty close to 4% on fixed income. So that's getting you just north of a 2% overall yield for the portfolio. With that, I want to show you the detail of the actual portfolio, and there are some changes here since our last meeting. So this, just while I'm kind of hopefully at a size that you can see, and again, this applies to all four portfolios. They're comprised of 11 different ETFs, exchange traded funds. Chris, I'll remind you, your investment policy actually has a stated preference for passive exposure to the markets. I think we probably talked about this pretty extensively in our last meeting. So everything you see here is consistent with your IPS. The top 5 holdings are all equities, and then you get your fixed income below that. All passive exposure to the relative indices that you see here. This has served you really well. It's within TD's model portfolios, and your portfolio is customized to your investment policy, but within TD's model portfolios, which include everything from ETFs like you see here, to mutual funds, different form of pooled product, both active and passive, as well as separately managed accounts, which are non-pooled solutions. Passive ETFs consistently are the best performing, and this has served you really well. I'm going to scroll a little bit over to the right here. What I wanted to point out in the first quarter, recall for the quarter you were down. No big surprise, the S&P 500 was down over 4% in the first quarter, and that is your single largest holding. In the first quarter, obviously, we had, which took most folks by surprise, the war in Iran and the subsequent impact on energy prices, which got the markets worried both about inflation as well as just overall levels of volatility. And then in addition to that, it somewhat surprisingly led to a sell-off in technology stocks, which by far have been the largest drivers of S&P 500 performance as long as we've had these portfolios with you. And so what I really want to point out to you here is despite a down quarter, your portfolio did well for reasons that have really been detractors in almost every period leading up to this, which is that all of the diversification that you see here away from the S&P 500 helped your performance. So the large value dividend segment of the market was actually positive for the quarter, just under 2%. Your mid-cap stock exposure, though negative, was meaningfully less negative than the 4% that you see in the S&P 500. International markets did the best. You can see plus 1% for developed, and then basically flat for emerging markets. Forgive me, I know that figure and the mid-cap figures didn't populate on your report. Those were added on January 5th, and therefore they just got cut out of the second quarter, but I was able to put in their actual performance, so you can see that here. So, not great relative performance, or not great absolute performance for those 3 months, but meaningfully better than the S&P 500. So within your equity sector, all diversification away from the S&P 500 was helpful. Now, interestingly enough, in the 6 weeks since the end of the first quarter, so far in Q2, it's been the opposite story. The S&P 500 alone is up 12% just in the past 6 weeks, ahead of all these categories. So that diversification, was really a detractor going forward, but we very much want you, consistent with your investment policy, want you to have diversification away from just the S&P 500. I'll remind you, when I say S&P 500, you might intuitively think, well, isn't that exposure to 500 companies? And the answer is yes, it is, but it's not even remotely level across those 500. The S&P 500 is a cap-weighted index, or put differently, it's a size-weighted index. And so when you put $1 into it, roughly 8 cents goes to Apple, 8 cents goes to Microsoft, 5 cents goes to Facebook, I think about 6 cents goes to Amazon. You get my point. And so we want you to have additional diversification, even though those stocks are very much in technology. The technology sector in general has been driving market performance. The top 10 holdings in the S&P 500 are now north of 35% of the whole index. And that's a meaningful amount of concentration. So you're seeing diversification here that, we put in all of our model portfolios, but it's also consistent with your investment policy. And then just below that, fixed income really didn't contribute anything to your returns. You can see for the quarter, slightly negative to flat figures. The highest performing was the 0.28% that you see in your short bond portfolio. You've heard me say before, bond prices, and what you're seeing here is the performance of your bond prices over the quarter move inversely to interest rates. And I'll show you in the market update, interest rates rose in the first quarter as the market really decided to reassess its view of what the Fed was going to do with interest rates this year. And to the extent that higher energy prices translate into higher levels of inflation, and we have very much seen that so far in Q2, the expectation is that the Fed is not only perhaps not going to cut rates this year. There's a big debate about that going on right now. But now we're even hearing noise about whether they're going to have to raise rates because of the levels of inflation that we're seeing. TD is not currently in that camp, but I also I do expect our rate forecast, which I'll show you, to change. And then just lastly, on the specifics of the portfolio, I'm going to jump to just the macro level performance statistics on the next page. So you don't see the performance detail of each individual holding, but you see the overall performance. Let's see if I can get this one size up for you. Okay, perfect. So again, Q2 minus 1.92%. We can compare that to two different benchmarks. Historically, we're comparing it to your IPS, but I'll kind of go through both of these for you. So you did essentially in line with your investment policy. The biggest difference here between these two is, one, there's no fees associated with your investment policy. Your fees are 20 basis points all in, so that's always a hurdle to be overcome within the portfolio. But then you have any differences in asset allocation, and right now the two are actually pretty aligned, with the exception being your policy has a 5% allocation to REITs, real estate investment trusts, and your portfolio currently has no allocation to REITs. It's really, you can think of that allocation to U.S. large value dividend style stocks as the substitute for REITs. And philosophically, they're not that different in the sense that, REIT investors are typically looking for income. REITs, by definition, in order to maintain their tax status, have to pay out 90% of their dividends to shareholders. And obviously, within a dividend-style equity investment, you're similarly getting dividend income. And so that's really the main difference between the two. At this point in time, I expect them to perform pretty much in line. There is a slight underweight to international in your portfolio today at 12 or 13% versus the 15% in your policy, but not a meaningful difference. Trailing 1 year period, I was just going to point out, the reason in Q1 you did so much better than the TD benchmark is, for the TD benchmark, it's almost all S&P 500. It's 60% S&P 500 versus the 50% that you have in your portfolio. That's the main reason for the outperformance versus the TD benchmark. Trailing 1 year period, the detraction of roughly 50 basis points that you see to your IPS is due to TD had a much more meaningful underweight to international stocks over that period, and international stocks did really well in 2025, and as I showed you on the previous page, slightly outperformed the S&P 500 in the first quarter. In 2025, it was mostly due to dollar depreciation. TD remains underweight in its model portfolios to international stocks on the thinking that Europe and most international markets are not expected to outgrow the U.S. That said, with the volatility that we've seen and going back to the tariff pronouncements in the second quarter of last year, we definitely have seen funds flow into international markets. In part, that's been a result of the dollar depreciation that I mentioned. And then over the custom period, this is since inception, so going back to 2021, so not quite 5 years because this was as of March 26th, but we are obviously currently approaching 5 years working with you. You can see the portfolio a little bit better than your index, than your portfolio, forgive me, your policy composition. Call it 37, 45 basis points, which is good. Obviously, we hope to add value over time to your investment policy mix. It really comes down to tactical allocation across sectors because your portfolio is 100% comprised of passive products. It isn't coming down to stock picking. It's not an individual manager choosing Coke over Pepsi. It's really the kind of tactical allocation to the benchmarks. But glad to see that outperformance over the roughly 5-year history. Those are all the comments I wanted to make specific to the portfolios, not recommending any changes beyond what I mentioned earlier in the first quarter this year. Were there any questions on that before I jump to the market update?
Just to clarify, John, because I ask this question every time, but so you don't see any need to adjust our investment policy based upon what you see happening?
No, I really like your investment policy. I personally, Suzanne and I have the pleasure of working at a shop where we can really construct any kind of portfolio for a client, whether they want to see the individual stocks, which we call SMAs, if they want mutual funds, if they want exchange traded funds, or a combination thereof. I have a preference for the ETF portfolios. I think I have 2 or 3 clients whose policies have a stated preference for ETFs, which is kind of consistent with my own thinking. TD is a bit agnostic on that topic. We have some clients who like mutual funds because they think the active performance may give them better downside performance. Sometimes you see that played out in the statistics, sometimes you don't. And then in terms of your specific asset allocation targets, no, your targets are not that different from what we have in our own model targets. So I wouldn't recommend any changes there. Suzanne, forgive me, I shouldn't speak for both of us.
Quite all right. The only thing I would suggest is just ratifying it to make sure that it's up, reflects that you've reviewed it and it's up to date.
Yeah, we will be doing that. I've already got one of the attorneys in legal looking at it specifically for that purpose, so.
Perfect.
Great.
And then, Tom, you reminded me while we're on this page, you had asked me about peer performance at the last meeting, and as I said then, and you'll hear me say again, I can't share internal client performance with you, so we kind of default to what's the Maine Community Foundation doing, what's the New Hampshire Charitable Foundation doing. The New Hampshire Charitable Foundation still hasn't released its 2025 audited financials yet, so I don't have updated performance info on that portfolio. I can tell you that the main community foundation portfolio in the first quarter of 2026 was down 2.1%. So not that different from what you see on this page, a little bit worse than your portfolio performance. And then in the 1 year period, they were up 11.4%, so meaningfully different. But again, not an apples to apples comparison in terms of the portfolios. They have both private equity investments, what they refer to as their alternative category, and to which you don't have any, right? So it's not a perfect apples to apples comparison, but going back to my comments of, passive ETFs have been the best performing products on my entire platform. Your portfolio has benefited from that.
Great, thank you.
Mm-hmm.
Other questions?
John, you've alluded to the rising cost of energy, oil, barrel price going up. In light of that, how do you explain the large increase in corporate profits for the oil companies?
That's a pretty good segue to this chart here. So this, I'm going to just let me just back. I'm going to come right to that question, Peter. But just as I jump into the market update, there's nothing on page 3 that's different from what we just highlighted in looking at your actual performance. This is fixed income on top, equities on the bottom, fixed income kind of flat to down in the first quarter because interest rates rose. 1 year returns for fixed income still pretty good because that includes last year's falling rate environment. And then you see the comments I made on the S&P 500 and international, and the outperformance of international over that 1 year period. The next page, which gets to your question specifically, is this is showing you sector performance. So we divide the U.S. economy into the sectors that you see on the left side of the table, or the bar chart, I should say. And the green line is Q1 2026 performance, and it goes from worst to best. And at the very bottom, you can see energy was up 38%. Energy stocks were up 38% in the first quarter. That's the single biggest reason why the value dividend style segment of the market was positive in Q1, when the S&P 500 was meaningfully negative. Utilities and consumer staple stocks are also meaningful components of the value index. They were both up, close to 8 or over 8% in the quarter. And then the growthier segments of the S&P 500, infotech down 9%, financials and information technology are the two biggest sectors within the S&P 500, meaningfully down. So the profits, Peter, would be a function of just, the supply of oil that had basically already been ready to go is now all of a sudden, because the price of oil is a global market and it's set globally, and so that's almost just like printing money for these companies. And you saw the kind of the enthusiasm reflected in the market's reaction to energy stocks. Utility stocks benefited from both a rotation to value dividend, and utility stocks have done, like traditionally, utility stocks are kind of in that bucket of what you sell to widows and orphans, right? Just highly regulated, consistent dividend payers, really low volatility. It's exceptionally rare to see a plus 8% quarterly return for utilities. Part of it was the rotation away from tech stocks in the first quarter, and part of it is the enthusiasm, dare I say euphoria, around data centers and AI and all the money going into the build out and energy that's going to be required to power them.
And that's where my question was going, John. Where does AI fall? Is that under IT?
Yeah, it's definitely under information technology, but then you get the residual benefits as, it's kind of like the gold rush in California. The biggest beneficiary of that was Levi Strauss. selling, he started out selling shovels. And then that kind of turned into clothing to all the miners. And so the tech companies are all, Google, and forgive me, Facebook and Google are now in communications, which is just below infotech. But Apple, Microsoft, NVIDIA, Broadcom, all in infotech. The other beneficiary, interestingly, real estate, right? The data centers, you're seeing REITs created just for that segment of the market. So real estate has really struggled kind of during COVID and post-COVID, is now benefiting from some of that build out. So yeah, REITs, utilities, energy, kind of all benefiting from the investment going into AI, as well as obviously the semiconductor and chip makers.
Thank you.
Yep. I want to show you interest rates. Okay. So I'll just remind you, I know we look at this quarterly, but this is the yield curve. So on the x-axis, this is U.S. government rates, U.S. Treasury security interest rates, from 1 month on the far left to 30 years on the far right. And then you can see the rates on the y-axis. And so, this was a huge surprise. I'll remind you, the Federal Reserve cut interest rates 75 basis points in 2025. We got from 4.5% to 3.75 on the Fed funds rate, the overnight rate. And we went into this year expecting at least another 25 basis point rate cut, if not a 50 basis point rate cut, which is still in TD's rate forecast, which I do not expect to last very long. But in fact, what happened, the 2-year was up 30 basis points. The 10-year was up 10 basis points. And as of now, the 2-year is about 4.10, so up another 30 basis points from what you see here. And the 10-year is about 4.65. So another 30 basis points from what you see here. So we've seen a dramatic increase in what we call steepening of the yield curve, purely as a result of the inflationary pressure we're seeing from oil prices. Most impactful for portfolios is me just reminding you that bond prices move inversely to interest rates. So this is precisely why you saw the flat to negative returns for fixed income in the first quarter. This is TD's tactical view I just wanted to share with you. This is super high level, obviously, but you'll see we have a modest overweight to equities and a modest underweight to fixed income. Now, if you're constructing a portfolio that has to add up to 100%, if you're overweight something, by definition, you have to be underweight something. So this call's worked out pretty good. These are modest overweights, like within our core models, 1 to 2%, but it's consistent with your overall portfolio. You're 75% stock. So you have a meaningful exposure to the equity markets that has served your portfolio exceptionally well. Our view here is, while volatility may persist, and we've definitely seen that, we remain overweight equities supported by both earnings growth and pro-business government policies, and we've seen that play out. And then the modest underweight to fixed income, has been a decent call just in light of the rate increases that I showed you. That was not the thinking going into it. It was really more due to, we think this is going to be another year of double-digit earnings growth for the S&P 500, and equity prices will benefit from that. So consistent with your overall portfolio mix. This is an interesting chart. I've showed you this before, but I think it's kind of worth highlighting again. What it's showing you is going back to 1980, and the green bars are annual S&P 500 performance over that time horizon. This was at the end of the first quarter, so you can see year-to-date minus 4% for the S&P 500. So that's annual performance, and then the red dots are how negative was the S&P 500 in any given year. So a crazy example is 2020, minus 34% decrease in the S&P 500 during the year. up 16% for the year. And so the point of this chart is to show you that equity corrections are normal, right? Seeing the stock market sell off and react to news in the markets is normal market performance. But for investors who have a long-term time horizon, which your investment policy clearly recognizes, and which you as an organization do, staying to your asset allocation targets has been by far the best thing that investors can do. And I can tell you just personally from the clients that we work with, those organizations who struggled to stay long the equity markets during periods of volatility have significantly underperformed. So our advice is almost universally to remain invested in that. And this is another good year where, like I said, things were looking pretty grim at the end of the first quarter, and now here we are. The S&P 500 is up 12% just in the past 6 weeks. And to say timing the market is difficult is, I would say, a gross understatement. It's really impossible. So well done to the organization for sticking to your investment policy targets and staying long. It has been by far the driver of your returns over time. And then I just wanted to show you lastly our views, and I'm going to caveat this with I do expect our rate view to change. We went, because this is unchanged since we went into the year. Fed funds target at the top, we went into the year at 375. We did adjust this. We did have a first cut in Q3. You can see we've now put both cuts in Q4. We'll see how this plays out. Chris, you may be the only one in the room who hasn't heard me say ad nauseum that to outsmart the fixed income market, you got to get 3 things right. You got to get the timing of the move right. You got to get the magnitude of the move right. And you got to get the direction right. And I've been staring at screens of interest rates for 30 years. I have yet to meet anybody who can get one of those things right. Even the Federal Reserve that sets the interest rate, their own forecasts tend not to play out. So as it turned out last year, TD's call was really good. We were spot on with the 75 basis points of rate cuts that we saw. We may lose a little ground this year with the accuracy of our forecast, but we did push out the easings until the fourth quarter. We still have 225 basis point cuts in the forecast. We'll see. The most recent inflation statistic, and yes, everybody knows it was impacted by the sudden rise in oil prices, but the April CPI actual inflation number was up 3.8%. That's almost twice the Fed's target of 2%. And then down at the bottom, at the very bottom, CPI, you can see our forecast for all of 2026 is 3.3%. This is not an environment where one would necessarily expect the Fed to ease. Our view, as you might suspect, is that we expect the inflationary pressure from energy prices to be temporary. And then we remain really constructive on the overall economy, despite all the volatility that we're seeing now. 2.4% growth for all of 2026 would be almost 0.5% better than 2025. And we're forecasting, as you can see, a slight decrease in 2027, but still healthy. This is real GDP, so this is net of inflation. That was all the formal comments I had. Glad to answer any additional questions that you might have.
I get a quick. Back to the Christmas charts, stocks and bonds. John, a page.
Which chart again, Chris?
I call them the Christmas charts. The stocks and bonds, the green and red. Page 7 and 8. Specifically 8.
Oh, 8, yeah.
Yeah. What's the takeaway there with bonds? I know you said provides ballast. It's actually an interesting term. What's the lesson learned there? Or
this chart is less meaningful to me for reasons which is why I skipped it, which I will explain to you now. So this is the same chart as the one I showed you for equities, which are kind of a really strong case for not overthinking short-term volatility in the equity markets. This is the same chart, but for the aggregate bond index. And this one goes back to 1976. And so, despite average intra-year drops of 3.5%, obviously bonds, you expect to be significantly less volatile than stocks. the aggregate bond index has been positive almost 90% of the time, with an average return of more than 6.5%. So the firm decided to kind of replicate that chart and, kind of trying to say the same thing, which is, don't overthink interest rates, don't try to outsmart the fixed income market. Yes, in any given year, rates will go up and produce periods of negative bond returns, but, 90% of the time bond returns are positive. The reason I skip this chart is bond returns are total return. Price performance of bonds are always going to be a function of changes in interest rates, and the starting rate matters. So, in the 70s, we had short-term interest rates were 20% in the early 80s. The long bond, the 30-year bond, was close to 15%, I think, at the peak. And I mean, we're nowhere near those levels now. Even though, Chris, you might have heard me say this in the first quarter of with fourth quarter 25 update that we did back in February, I think. Bond returns last year were north of 6%, but it's not because we live in a 6% interest rate world. It's because interest rates fell. We live in a 3.5 to 4.25% interest rate world right now. That's going to be your return, right? You see the volatility associated with interest rates moving up and down in this chart, but at the end of the day, if you buy a bond with a 4% coupon and you hold it to maturity, you're going to earn 4%. And I kind of skip this because we are in, it's just such a wacky history of interest rates. From 76 to 82, you kind of had this north of 10% interest rate environment, and then rates fell virtually every single year from the early 80s to 2021. Well, let me rephrase that. They fell to about 2011, and they just stayed, below 1% for that whole period of time. So the bond market is so different from the equity market in terms of what drives prices. I find this chart to be a little less meaningful than the equity chart, because with bonds, you're really going to earn whatever return the market gives you at any point in time, given the interest rate environment. That was a long-winded answer to your question, but does that make sense?
No, it's very helpful. What historical thing happened in 81 to get that 33%?
Yeah, so let's point out the two anomalies here, which would be 81 and then 2022 on the opposite side, right? Those are real outliers across this chart. Yep. So the Fed, so that whole increase in the late 70s into the early 80s was to fight the inflation of the 1970s, and we coined the term stagflation back then. And that was, it all started with the oil crisis and the oil embargo and OPEC's actions. And we saw dramatic inflation, and Paul Volcker, the Fed Reserve Chairman, like I said, he raised short-term rates to 20%. The whole yield curve moved up. It was inverted. So the short end of the curve was 20%. The long end was, 12, 13%. And what happened here is rates started falling. And the aggregate bond index has a duration of about 8 years, which means a 1% change in rates equates to about an 8% positive return. And so, interest rates fall 4%, which is really easy to do when they're at 20, 15 to 20, and all of a sudden you get a 30% return. So that was an anomaly because rates fell dramatically from a very high rate. And then 2022, supposedly 2022 was the worst year for fixed income markets since 1788. Now, please don't ask me to fact check that, but TD both said that, and I remember Deutsche Bank or JP Morgan saying the same thing. So, literally, George Washington was bemoaning the performance of his bond portfolio. This is always going to be a function of raising rates. And so interest rates, you know,
Inverse.
were all below 1% until 2022, and then it was the inflation. Is the exact opposite of this story. It was the inflation caused by really the stimulus from COVID. You know, grocery prices were going up 8% a year, and the Fed realized, oh, good gosh, you know, we can't keep rates below 1%, and so they went from like 0.5% to 5.5% in a year, and then that was this reaction. And then, like you see here, you know, 2025, that 7% for the aggregate bond index. This was a falling rate year. So, in a year where rates don't move, you would expect to see in this rate environment like a 4% return, and that would be a pretty good projection for your portfolio, the fixed income component going forward, which isn't bad. You know, that's if the Fed can get inflation back to its target, that's almost a 2% real return for a very conservative component of your portfolio. That's okay. I'd be thrilled if I don't want to see the economy experience a massive disruption from inflation, but I also would very much like to not see rates, you know, go back anywhere close to 1%. It's just a really difficult environment for savers who, for one reason or another, just can't tolerate the volatility of the stock market. That's just a very low return for the risk-free rate. Thanks for asking. I'm sorry I skipped that one.
Thank you. That was helpful.
Yep.
Question, Peter?
Anything else we can answer for you today?
John, I'm gonna ask the same question I think I did at the last time we either had you in person or on Zoom, whether or not TD would consider, given the fact that our total portfolio has increased substantially since when you took over, by your good work, but also the amount of money that's been brought in, would you consider a rate reduction? And to my knowledge, to date, you haven't gotten back to us.
Forgive me, Peter, you're correct. We owe you an answer on that, and we will give you an answer on that. We have what I remember telling you, or, you know, for better or worse, this is for Suzanne and I to decide. We have a committee that we need to bring this question to. Meets once a month at least. So what is this? Late May? Just give me 3 or 4 weeks, and we'll have an answer for you on that one. Forgive me.
Okay, thank you, John.
You're welcome.
Other questions?
No.
Thank you both. Any questions, Judy?
No, I'm all set, thank you.
Great. Thanks, everybody. If anything comes up after the call, just let us know.
Thank
Okay.
you.
Enjoy your weather.
Thanks, everyone.
Bye-bye.
Bye-bye.
All right, so last item on the agenda is public comment, and since there's nobody in the public, I will entertain a motion to adjourn.
So moved.
Second.
All in favor, keep on saying aye. Everybody votes aye.